Good evening. This is Doc Severson for the Theo Night Report for Tuesday, September 12th. Here's an intraday chart of Apple today, and this is kind of the journey that it went on. It started down, led up to the big announcement of the products, and then after that, it's kind of like after Christmas morning where the toys are put aside and the kids start playing with the box that it came in. So as we look at the longer-term fractal charts of Apple, we can kind of get a picture for what occurred today, with today being an outside day with a lot of range here, but really net negative movement. Not extraordinarily negative, but net negative movement. Now here's the deal here. These two medium time frame charts, so the daily chart and the weekly chart, are both pretty well wound up. There's been a lot of sideways behavior here, a lot of non-linear price action. And what that does is wind up the spring tighter and tighter and tighter until it has to move. So it's got to move in some direction, but this is the problem here. We have these kind of concrete overshoes that the monthly chart is wearing. And we've seen this pattern before where we just kind of go ballistic and then we get into exhaustion here and then the chart has to correct. We go ballistic, the chart goes into exhaustion, and then we have to see a correction. Chart goes ballistic, then a correction. Chart goes ballistic, same signal, same pattern here. Is Apple going to break that pattern this time for the very first time? Now, if you've heard me before, I'm not a big believer in shorting the highs, especially something that's got this strong of a trend, because guess what? Guess why it got there in the first place is because everybody went short, 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 short Apple, and all got squeezed out to the upside. So wait for that reversal to start happening from the inside out. So the way that this happens here is that, first of all, perhaps it sets up a lower high, lower low, and Apple starts maybe trending to the downside. Okay, all that's going to do is just pull down the weekly chart, get people excited, but eventually those bears are going to get squeezed out again as the price rallies back up to the upside. But here's going to be the key, is if and when this puts in a lower high. Okay, if and when this puts in a lower high, which will be noticed by the daily chart reversing to the downside. So reversals always start from the inside out and then they propagate to the next larger time frame. So this will just start a monthly swing down, and eventually if we ever see a monthly lower high and then a lower low, then we really have something going on here. So what I always tell people is don't wait for the or don't fall for the lower high in the daily chart. Wait for the lower high to set up on the weekly chart, because that's usually the first real serious movement. And the reason that it's serious movement is because you get a lot of people on the wrong side of the tape with too big a position and no idea how to set the risk on the position. So bottom line here is, if you're bearish on Apple, got to be patient. Got to be patient for the structure to set up first. Now here's the S&P 500, and the weekly expected move, even though it was set for 3 points at the beginning of the week, actually got nailed today. So not only nailed and touched, but also we've gone above 250 on the spiders. And so let's check really quick to see whether we're at, no, we're not yet at 2,500 yet. The reason why we're not at 2,500 yet on the full S&Ps is because the dividend is baked into the spiders. So the spiders are reaching just above that 250 level, 250 level on there. That dividend will get taken out this Friday. Now, notice this. We are going to be at an exhaustion level here really, really soon on the daily chart for the spiders for the S&P 500, because it's applying this linear move. So this move that's gone from about 2430 up to close to 2,500 now, that's about a 70-point move. That on the full S&Ps, that is usually enough to fire off an exhaustion signal, as we've seen these many times before, and perhaps create this sideways movement. This is where we can play what's known as a calendar spread. So if we go over to our analyzer, we can see that something like this would set up. So perhaps we'd sell some short-term premium, maybe sometime in early October, and buy an insurance option set for sometime in the November cycle. So this is the way the trade would look like on first initiation. Now, the warning here, though, is be careful, because you don't want to set this up too early. Don't set these up prior to the dividend being paid. And the dividend is going to be paid this Friday, right? So if we go into our option chain here and look at the underlying, we can see that the ex-dividend is 6/16/17, so the last one. It gets paid quarterly on the monthly expiration. So the ex-dividend date is this Friday, the 15th of September, and that's when it's a little bit more dangerous to have a short call option. So we can avoid this by using put options in our calendar. Okay, so that makes it easier, but still we have to account for the fact that that dividend is going to be taken out of there. So probably it would be better to wait on this trade until early next week. We'll probably see that exhaustion signal set up by sometime like Thursday, Friday, Monday, around that time frame. And so the calendar spread is going to be a good entry at that point as we anticipate the next sideways coil up in that area. That's it for today's report. Thanks for listening, folks. We'll see you tomorrow.